Hey guys, Jim Cady here with Cady Real Estate. I'm here to give you guys a market update for 2017 Lafayette Parish residential market. We did this earlier in the year and we got a lot of great feedback. We want to keep everybody up to date on what's happening in Lafayette and what does it mean to you as a homeowner or a buyer if you're in the market. So what we're going to go through, I'm going to give you an update, a little history on what happened in 2015 and 16, and then we are going to talk about the entire Lafayette Parish market, and then we're going to break it out into new construction and then existing home sales, and then I'll go over some news, predictions on mortgage interest rates and what else is happening out there. So let's get right into it. Again, you can't really talk about 2017 unless you talk about 2016, and can't talk about 2016 unless you know where we're coming from. So 2015 is a great place to start. It was the best year on record for Lafayette Parish, which means we sold more houses, and the number of houses we sold in 2015 was more than we ever sold before, and there was more volume sold, so more dollar volume sold on record for Lafayette Parish. 2016 sales were down slightly by 4% from 2015, but most of that shortage, actually all of the shortage of sales, was actually due to the new construction sector. So we sold much less new construction houses in 2016 than we did in 2015, and that's what created the shortage in 2016. Now, the average price has been falling since 2015. We peaked in 2015, and it's been falling ever since because we're selling more and more homes in the $200,000 and less homes in the upper price range houses. For instance, last year and this year, the houses that have sold above 500,000, there's just much less. So when you take those out of the calculation, our average price is going to fall. Now, in 2017, our existing home sales, so these are homes that are not new construction. These are homes that have been lived in and sold again. That is up 12%. Existing home sales are strong because of the high demand for houses under 300,000, and it's really hard for a local builder to build under 300,000 and make a profit. So a lot of the new construction houses were in the 300,000 plus range. Now the new construction houses that are under 250, around 200,000, they're selling very well. So just because it's new construction, it's not about being new construction, it's about being in that right price range. However, the overall volume has dropped 1% in 2017 versus 2016 by 4.7 million, mostly because of the lack of the sales in the upper price range and in the new construction sector. And I'm going to show you guys that in the slides to follow. So demand has been exceeding supply in the lower price range home, and it's a great time to sell if you're priced under 300,000. Now, this is Lafayette Parish in general, that you always have to look at your actual neighborhood. So, please, if you have questions about your neighborhood, you can give us a call, and I'll give you some information how to get in touch with us. So the next slide I want to show you guys is the average price. So like I said, we peaked in the first quarter of 2017. Our average sales price was $227,000, $819. So we fell last year, and we fell some more so far the first half of this year. We're at $213,583 is the average sales price. It seems like that fall is slowing down. So I feel like we are going to probably hover around the 215 range throughout the rest of the year. If you look at Lafayette Parish pending, so pendings are a good lead indicator to see what's going to happen. And I want to show you something. If you look at the red circle here on the right side of the screen, you can see we had the best October and November for pendings in 2016 than we ever had. So we had a really strong December and January in regards to pendings. And you're going to see that in regards to sales. Our first quarter of 2017 was really strong for closings. Now, pendings are up almost 3% if you look at the entire year so far. And it has slowed down a little bit in July. All of this data is through July, so keep that in mind too. Now, if you look at the sales, so pendings are a lead indicator to the sales, you'll see that our first January and February was very strong compared to 2016, and actually into April we did better than we did, and we actually sold 78 more homes, which is a 4% increase from 2016 year to date, and year to date goes into July. So in 2015, if we look at 2015, if you look at the bottom of this slide, 2015, you'll see if we compare 2017, 2015, 2017 is down 108 sales, which is 5% down. So although we're above where we were last year in total home sales in Lafayette Parish, we're still below, slightly below, 5% below where we were in 2015. Now what we're going to look at is the volume. So this is how many sales we had. The volume is a dollar volume, and what we're looking at for versus 2016. 2017 versus 2016, year to date, we sold 5 million more sales in 2017, which is a 1% increase in dollar volume. If you look at, if we compare that again to the best year on record, we are 12% less in dollar volume than we were this same time in 2015. So although we're stronger than we were last year by 1%, we're still 12% below where we were in 2015. So now let's look at the average days on market. So in Lafayette Parish, the average days on the market, the total cumulative days on market has increased 5% from 2016. So what does this mean? It takes 5% longer to sell a house in Lafayette. It's really not that much. When you're looking at our average days on the market, is hovering around the 100 day mark total. You could see, so that's only about 5 more days. We did see, although the total average days on the market is increasing by 5%. If you break it down, we broke it down to new construction, existing construction, and then the green is the total. I want to show you something. You can see here the new construction average days on the market has decreased for the first year in the last few years. So we saw a decrease in the average days on the market. It's only 2%, but it means that new construction is selling faster than they were last year. And you can see we have an increase in the days on the market for total days on the market, but our existing home sales are still selling around 80 days. It takes about 80 days to sell the existing home sales. I'm sorry. So let's check out what drives the days on the market and the sales. I like to look at foot traffic. So we're able to calculate how many showings we had so far this year versus last year at the same time. So, and the historical data on foot traffic is a good indicator on demand. And if you look at this, so foot traffic is, versus from 2014 to 2016. I want you to see we have a lot of, we've had a very healthy year so far in foot traffic. I do want to let you know, time is of the essence. If you're thinking about selling your house, there is a pattern towards the end of the year. You do want to get your house on the market while there are a lot of buyers out there, because you can see there's no doubt the number of buyers and the foot traffic out there does fall towards the end of the year. So there is a pattern there. If you look at the foot traffic, so by quarter, you can see CSS reported 7% more showings in 2016 than 2017. The data indicates less showings to close in 2017. So we've actually, we were able to close more houses with less showings in 2017. Another issue and why this might look like we have less showings than we normally do is because of the inventory in the $200,000 price range. We have almost every one of our agents in our office is currently looking for houses in the $200,000 price range, and they've seen everything on the market, and they would go look at more houses, but there's just not enough inventory out there for them to look at. So that is something you have to take into consideration. So let's look at Lafayette Parish inventory. So real estate is a function of supply and demand. The more supply you have and the less demand, the prices are going to fall. And if you have more demand than supply, then prices are going to rise. And one good indicator of that is the inventory. So, the impact of monthly housing inventory and home prices, we like to look at, we look at how many months of inventory is in a certain area to determine, is it a buyer's market, seller's market, or is it a neutral market. So if we have homes if we have less than 6 months of inventory, you are in a seller. That means that there's not enough supply and there's too much demand, and prices are going to continue to go up. We have, if you're 6 to 7 months of inventory, that means it's a neutral market. And if you're greater than 7 months of inventory, that's a buyer's market. That means prices will continue to fall. And currently in Lafayette, if you look at all of Lafayette Parish, we have areas in all of these markets. There's areas in Lafayette that there's less than 5 months of inventory, and there's areas in Lafayette that there's 10 months of inventory. It also has to depend on the price and everything else. But on average, if we look at Lafayette Parish on average, here's what you're seeing for inventory. So this is active inventory currently from 2014, 2015, 16, and 17. You can see that we are at a height of inventory currently. However, we are selling the houses as fast as we are putting them up. So if you look at the total inventory by months of inventory, we are still below 6 months of inventory when you look at all of the houses that are selling out there. So what does this mean? Is your house in a buyer's market or a seller's market right now? It really determines on your price range and your location. Some areas in Lafayette, we are actually we have not enough supply in almost all price ranges. In the core of Lafayette, we're seeing low inventory in even the upper price range houses, and in some neighborhoods. And in other neighborhoods, there's just way too much inventory. So you really have to take this with a grain of salt and look at your specific area. But in Lafayette in general, 6 months is a neutral market. We're below that. So Lafayette is still a great time to sell if you're thinking about selling. Our inventory is hovering around 5 or 6 months, and that indicates a very healthy market overall in Lafayette Parish. Remember, 70% of the market is under $300,000. And so you might say, well, we've got a lot of houses in the upper price range that are for sale, maybe in your neighborhood. However, most of the sales that are happening are under $300,000. 70% of them are under $300,000. Foreclosures. Let's look at foreclosures. What has happened from 2017 from 2007 all the way to that? So for the last 10 years, I want to show you. We peaked in 2013 on foreclosures, and we went all the way down. So a lot of my good friends and peers thought we were going to see an increase, a really heavy increase in foreclosures because of the oil industry. and we just haven't seen that. People had equity in their houses and were able to sell them because it's still falling. Foreclosures are still falling. It's leveled off. It's very, very minimum. You can see we're talking about a couple of dozen foreclosures in Lafayette Parish, according to the MLS, as far as sales. So let's look at new construction in Lafayette Parish. When you're talking about new construction, we're going to break it down again into pendings and sales and volume. So if we compare 2017 to 2016, we had 10% less pendings. And remember, pendings are a lead indicator as to what's going to happen on your sales. And so we had 10%, a 10% decrease. I'm sorry. I think I might have said an increase, but it's 10% decrease this year versus 2016. And if you look at our new construction sales by quarter, we reported 72 or 14% less new construction sales in 2017 versus 2016. And in volume, we're at 15% less volume in 2017 versus 2016, or 21 million less this year so far in the new construction sector. But there's some very interesting points I want to make here. The new construction, this is active by quarter. This is there's been a 24% reduction of new construction actives in 2017 versus 2016. So fewer actives equals less supply. If the supply continues to decrease faster than the decrease in demand, then prices will stabilize. So that's what we're seeing. And if you look at the inventory, we didn't see a huge increase in the amount of inventory of all of the new constructions in 2017, and that is because the builders aren't building what's not selling. So they stopped building the houses because there wasn't enough demand. So that is keeping the prices pretty much stable in the new construction sector. We're not seeing a huge decrease in the average price range for houses. So for instance, if you're looking at a new construction house, you might not see that builder take $40,000, $50,000 off the price, and it's because there's still the inventory across Lafayette Parish is still below six months of inventory in the new construction. So that's a really interesting point. Supply is falling faster than the demand. This should stabilize the prices. There's 24% less new construction actives this year versus last year at the same time. That's a huge amount. So a quarter of all the houses that were there's 25% less houses in new construction homes for sale than they were last year. So that's a really good point. So let's look at the Lafayette Parish existing home sales. So Lafayette Parish existing home sales right now, if you look at the MLS by quarter, we reported 117 or 8% more sales in 2016 versus 2015. So 2016 for existing home sales was one of the best years on record for existing home sales. Now, there was a huge surge in pendings in the fourth quarter of last year, and this is the pendings. You're going to see that in 2017. In the first quarter of 2017, we had a huge surge of sales from this surge in pendings. And remember, it was the third quarter we had, in the third quarter we had the flooding, and we still had a lot of pendings in the third quarter. So without the actual even with the flooding in August of 2016, we had a great year last year. And existing home sales, so 2017 has been the best year on record for existing home sales. You can see this here, this purple line right here. You can see It's better than 2014, 15, 16, and 17. Now, this summer we went slightly in August when we hit at the end of July. We're slightly below where we were last year, but year to date we sold 150 more existing homes than we did last year. So that's a 12% increase in existing home sales. Existing home sales by quarter is another way to look at it. 2017 is shaping up to be a record year for existing home sales. There's been 12% more existing home sales in 2017 versus 2016. In 2016 was the best year on record, but only by 1% or 17 homes. So as far as existing home sales, 2015 was an amazing year. 2016 was a little bit better, but only by 17 homes. And this year we're 12% higher than we were last year. So it's been the best year on record for existing home sales. I know that's surprising for a lot of people. In our volume, 2017 versus 2016, MLS reported 25 million or 10% more existing home sale volume than we did last year. So you can see, although our total volume is down, there's a lot of houses in the lower price range that are moving, and there's a high demand for those existing homes. So we sold more so far this year as far as volume and number. Existing home months of inventory, you can see we're below. We're struggling to even be at 5.5 months of inventory. Let's look at interest rates. Okay, where are they going? What's happening? So let's look at Fannie Mae, the Mortgage Broker Association, and National Association of Realtors. They come out with these predictions every quarter, and here's what they were predicting so far. So we take the average of all of them. You've got Fannie Mae at 4 months for the third quarter, 4.3, 4.1. So they were predicting at 4.13. The fourth quarter, they're predicting at 4.3, so they're predicting to go up. 2018, same thing. The first quarter of 2018, they're predicting it to continue to rise. Now, I do take this with a grain of salt because let me show you, this was their predictions last year. So in 2016, they projected our interest rates to be around 3.6, 3.7, and 3.9, but our actuals were actually higher. So it is a moving target. It's very hard to completely understand where they're going to be in the future, but we do, so far this year, they are predicting them to go up. They're still very, very low. So, some people say, well, if they go up, to 4.5%, that's going to really affect, the purchasing power of buyers. And it will affect the purchasing powers, but we don't believe it's going to make that big of a difference because the housing affordability index, which is, how we measure how affordable houses are, is still very, very low. So let's look at that. The housing affordability index, if you look at from 2009 all the way to today, the higher the number, the better. The affordability is down from 2009, but not by much. It's still very high. So let's look at it in another chart. So you can see, although affordability is down, it's still very high if you were to take out the years when the distressed properties dominated the market. Now, this is a national statistic. You can see the higher the number, the more affordable it is. And if you look at 2008, you can see right here that that's when we had the bust. And we had all these years from 2009 all the way to 2015 where we had lots of foreclosures, lots of distressed properties nationwide. And so although the affordability index is lower than it was in these years, it's still very high compared to 2007, 8, all the years previous the bubble, but the bust. Monthly mortgage payment. Okay, so here's if you look at on medium price homes in the U.S. from 1990 all the way to today, 2006, the medium monthly mortgage was $1,305, and today we're looking at just under 1,000. So it's still very affordable compared to 2008 and before. So, and those of you guys who remember, this is the interest rates in the last few decades. You got 1970s, it was at 8.8%. The 1980s at 12%. I hear stories from my parents when they purchased their houses, and friends of theirs, they were at, some of them were even higher than 12% on adjustable rate mortgages. In 1990s, 8, and then 2000s, 6% was incredible. And so it's still very affordable to own a house. Interest rates are still low. I don't see the interest rates, if they increase 0.5%, I don't think that's going to change the direction of the buyers. Now, here's an overview of sales for January through July 2017. If you look at existing home sales versus 2016, we are up 12% because we've sold 150 more houses during the same time this year than we did last year at the same time. So that's a 12% increase. New construction is still down. We're down 72 houses or 72 sales, and that's 14% decrease. If you look at both of these combined, we're plus 4%. So even if you combine the new construction and the existings, we're still higher by 78 sales than we were last year at the same time. Overview of volume, existing home sales. As far as volume goes, we are 10% higher than we were last year, so that's incredible. That's great growth. Now, new constructions were down 15% in volume, and part of that is the builders are definitely not building in the price ranges that aren't selling. So, we have less homes in the upper price range selling and being built. So, the builders have to, work with what they're given. All homes, if you combine all of these, we're still at a 1% increase from last year, or 4.7 million as far as volume goes. Now, if you look at Lafayette Parish real estate market 2016 versus 2017, again, we're 4% up. Volume's up 1%. Our average sales price is down slightly, $7,000. That's a 3% decrease. Our average days on the market is up. That's 7%, so we're up 6 days. Inventory, we're up. So we have more inventory, but just slightly by 0.24%. So we're still at 4.6% increase in the number of inventory. And pendings, we're at 3%. We're 3% higher than we were last year if you take all the pendings. Interest rates are at 5%, are up 0.2 because we went from 3.8 this time last year to 4%. So we are up on the pendings. But in summary, sales so far this year are up by 78 year over year, or 4%. Volume is almost 10%, or 25 million year over year. Pendings are up by 3%. The increase in the number of sales and volume is due to a significant increase in the existing home sales. Existing home sales are strong because of the high demand for homes under the $300,000 price range, and existing home sales are up 150 sales, or 12%. Demand exceeds supply in the lower price range homes, and it's a great time to sell if you're priced under $300,000. There's no question about that. Some neighborhoods in the core of Lafayette are lacking supply in all price ranges. Houses priced over $300,000 are starting to drop. The prices are starting to drop, and houses priced under $300,000 are stable. Demand equals supply, and that's 75% of the market. The higher end homeowners are moving down, and the first time home buyers are buying because of low interest rates and high rents, which is creating the demand for the lower price range houses. New construction sales and volume is down 14% year over year. And the Lafayette market as a whole, it's strong, but there's many variables. All indicators point to a very strong 2017. And it really depends. I'm going to say this again. It depends on where you live and what neighborhood you're in. So it's really important to keep up to date on what's happening in your area, so you can have a pulse on your investment. And when it's just like the stock market. You want to sell when it's high. So if you have any questions or would like to get information or find out what your home is worth in your neighborhood, we'd be glad to do that. We also have market updates. We publish a free market update of Lafayette Parish every single month. It's a great report if you want to know what's happening in your area. And we also provide our clients and friends with neighborhood real estate updates for your neighborhood. So we can send you every new listing that comes up, the interior exterior photos of the houses in your neighborhood, and price changes, sales, things like that, so you know what's happening. You can email me, jim@jimcady.com, or text my cell phone, 337-344-4236. I hope you got some value out of this. Thank you for tuning in, and we'll catch you next time.